Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we'll be talking about 7 small companies from the portfolio of Professor Sanjay Bakshi. Now friends, just a disclaimer, this is not an exhaustive list and is only a listing of stocks where ValueQuest holding is above 1% and is available on the shareholding patterns. Please watch this video to know more. The first stock on the list is Accelya Kale Solutions Limited, which is available at Rs 1073.60 and the face value here is 10. The holding for this particular stock is 3.15% and the symbol for it is ACCELYA. Now Accelya Kale Solutions Limited is a software solutions provider to the global airline and travel industry. The company is involved in computer programming, consultancy and related activities. Now, as is evident from the 1-year chart, the company was consolidating for the first few months of the year, but since then the stock has been on a consistent decline. The market cap of the company is 1602.48 crores, which means that the company is a small cap one. The EPS of 65.76 translates into a price to earnings ratio of 16.33, which is much cheaper when compared with the industry PE of 23.15. The book value for this stock is 110.33, which translates into a price to book ratio of 9.73, which appears to be a bit expensive. The company has a very strong dividend yield of 4.75%, whereas the promoter holding is also a very strong factor for this stock and stands at 74.66%. The 52-week high is 1636.90, whereas the 52-week low is 1029. Now the second stock on the list is Wim Plast and it's available currently at Rs 908.35. The face value for this stock is 10. The holding here stands at 1.34%, whereas the symbol for this stock is WIMPLAST. Now Wim Plast Limited is engaged in the manufacture of plastic molded and extruded articles. The company's products include Cello Image, Comfort Series, Premium Range, High Bec Range, Standard Range, Center Table, Utility Products, Dining Tables, Stools, Kids Special and Material Handling. Now, as is evident from the 1-year chart, this company has also been a laggard and has been on a consistent downtrend. The market cap of the company is 1090.33 crores, which again makes it a small cap one. The EPS of 37.20 translates into a price to earnings ratio of 24.42, which is much cheaper when compared with the industry PE of 36.47. The company has a book value of 247.36, which translates into a price to book ratio of 3.67, which is not wildly expensive. The debt to equity here is 0.0093, whereas the return on equity for the stock is 0.1593. The company has a dividend yield of 0.77, whereas the promoter holding is a strong number at 69.90%. The 52-week high stands at 1585, whereas the 52-week low is 805. Now the third stock on the list is Ambika Cotton Mills Limited, which is available at Rs 1275.55 and the face value for it is 10. The holding here stands at 4.47%. Now Ambika Cotton Mills Limited is an India-based company engaged in manufacturing and selling specialty cotton yarn. The company operates through 2 segments, which is textiles and windmills. Its geographical segments include Europe, Asia, others and India. Now the 1-year chart reveals that this company has not really done much other than a huge spike towards the middle of the year, which could not sustain. The market cap of the company is 730.25 crores, which means that the company is a small cap one. The EPS of 106.67 translates into a price to earnings ratio of 11.96, which is slightly below the industry PE of 13.71. The book value of 760.96 translates into a price to book ratio of 1.68, which also is decent. The stock has a debt to equity of 0.0970, whereas the return on equity for this stock is 0.1520. Now the company did not pay out any dividends and hence the dividend yield is 0 and the promoter holding is just about average at 50%. Now the next company on the list is TVS Srichakra Limited, which is available at Rs 3022.45 and the face value for it is 10. The holding here stands at 2%. Now the symbol for it is TVS SRICHAK. Now TVS Srichakra Limited is a holding company. The company is engaged in the manufacture of tires and tubes. Its subsidiaries include TVS Srichakra Investments Limited and TVS Europe Distribution Limited. Now the 1-year chart again paints a similar picture that this company has not really done much and has been on a consistent downtrend since about the middle of the year. The market cap of the company is 2,314.31 crores, which is a borderline market capitalization between a small cap and a mid cap. The EPS of 153.60 translates into a price to earnings ratio of 19.68, which is much cheaper when compared with the industry price to earnings ratio of 28.31. The book value here is 904.51, which translates into a price to book ratio of 3.34, which is also not widely expensive. The debt to equity is a poor number at 2.5935, whereas the return on equity for this stock is a very strong number at 0.3074. The company has a dividend yield of 1.68%, whereas the promoter holding stands below average at 45.36. The fifth stock on the list is CCL Products Limited, which is available at Rs 267.65, and the face value here is 2. The holding here stands at 1.83%. The symbol for it is CCL. Now CCL Products India Limited is engaged in the manufacture of instant coffee. The company operates through the coffee and coffee related products segment. It is engaged in the manufacture of soluble, instant spray-dried coffee powder, spray-dried agglomerated granulated coffee, freeze-dried coffee and freeze-concentrated liquid coffee. Now the 1-year chart again paints a very poor picture, which shows that this company has not really done much and is closing the year below what it started it. The market cap of the company is 3,560.49 crores, which means that this company is a mid cap. The EPS of 7.61 translates into a price to earnings ratio of 35.17, which is a bit more expensive when compared with the industry PE of 28.93. The book value here is 44.70, which again translates into an expensive price to book ratio of 5.99. The dividend yield here is 0.93%, whereas the promoter holding is again below average at 45.02. The 52-week high is 355.05, whereas the 52-week low for the stock is 253. The sixth stock on the list is Kitex Garments Limited, and this is a stock which divides opinion like no other. The current market price here is 107.90 and the face value is 1. The holding here stands at 2.09% and has slightly decreased quarter on quarter. The symbol for this stock is KITEX. Now Kitex Garments Limited is an India-based company engaged in the manufacture of fabric and ready-made garments. The company operates through two business segments, which are garments and fabric. The company exports its products to the United States and European markets. The market cap of the company is 717.54 crores, which means that the company is a small cap one. The EPS of 10.53 translates into a very cheap price to earnings ratio of 10.25 when compared with the industry PE of 48.81. The book value here is 68.52, translating into a price to book ratio of 1.57, which is also decent. The debt to equity here is 0.3035, whereas the return on equity for this company is a very strong number at 0.3464. The company has a dividend yield of 1.39, whereas the promoter holding is also above average at 54.82%. Now the 52-week high for the company stands at 345.65, whereas the 52-week low is 98.15. Now friends, we need to be a bit careful about this company as there are a lot of concerns around the corporate governance associated with this stock. Now the final stock on the list is Narayana Hrudayalaya Limited, which is available at Rs 251.85 and the face value for it is 10. The symbol for it is NH and the holding here stands at 1.24%. Now Narayana Hrudayalaya Limited is an India-based holding company. The company operates a network of hospitals, diagnostic centers, clinical centers or test laboratories. The company operates through the medical and healthcare services business segment. The company offers medical, surgery and diagnostic and support services. Now the 1-year chart would show that this company has been on a downtrend after about the half of the year, prior to which it was consolidating. The market cap here is 5,146.83 crores, which means that the company is a mid-cap one. The EPS of 2.97 translates into a very expensive price to earnings ratio of 84.80, which is also much more expensive when compared with the industry PE of 48.42. The stock has a book value of 54.65, which translates into a price to book ratio of 4.61, which is also on the higher side. The debt to equity here is 0.7739, whereas the return on equity is 0.0514. The company did not pay out any dividends, but the promoter holding here is a strong factor at 63.85%. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, if you are benefited by the content on this channel, please don't forget to share these videos. This motivates us to keep making such videos for you. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.